very good morning to you and welcome to the pre-market rundown for Friday, February 25th, 2022. I'm Andrew Horowitz. Thanks for joining me. That song was appropriate for what's going on. Markets under pressure, at least they have been for the last number of days. Hopefully you are holding up well and you are trading these successfully. Obviously, there's a lot that goes into not only trading, but also your psychology and psyche, as well as your emotions right now. And it's something that is, you try to put aside and you try not to deal with and try to put the emotions at the door. We always talk about that. Utilize the tools and techniques that we've learned here. Be disciplined in your approach. But the fact of the matter is that sometimes it gets a little overwhelming, doesn't it? I'm sure a lot of you are looking at what is going on in the markets right now and thinking, what the hell is going on? We see some good numbers and bad things happen. We see some bad things happen and good things go on in the market. So right now, where are we in the realm of all this is something that we're going to get to and talk about. And I think one of the things that really is a testament to some of the work that we've done is the chart that you're looking at right in front of you. Before we get to that, let's talk about some of the disclaimers, disclosures, requirements that we have here. And of course, we have to note that this is for educational purposes only. There are no recommendations to buy or sell any securities that we discuss. I want to make sure that's very, very clear. I am doing this for training and giving you ideas and options to go off and do your own research to understand what is going on with regard to the bias in the market, whether you want to be either on the long side you can consider or on the short side or not anything at all, where it is that you will benefit from potentially in the trade schema overall. A lot of that has to do with where the markets are, of course, but I just want to make sure we are using this as an educational tool because, of course, investing involves a great deal of risk. Now, we talk about different things. We talk about, of course, the ETFs and indices, and we talk about futures, and we talk about currencies, and we talk about Bitcoin, and we talk about the commodities out there and stocks, of course. And what's interesting to note, if you look very clearly, something that we've had, I have not changed this chart at all. And what I want to share with you, we put in a mark there at about 318.28. You can see that, right? 318.28 is where we put that mark. And that was that line I said, if we start breaking down considerably, where is that downside? That's the question I asked, is where is the downside from here? Frankly, I didn't think we'd get to that point so quickly at all, or even in a very reasonable manner, unless something happened. And of course, we had the little issue over in Russia and the Ukraine happening, but we drew in this line right here. We drew in this line at 318.28. It was a rough line. I said, what do we want to do? When we look back, always looking from right to left, always looking to find where those connecting lines on the altimeter are. And we found a very good level of support right here. Now, a couple of things about that support level. Why was that important? Why did I tag that? Well, if you look at that, it was an area that was difficult to get through. When it did, it popped and went right up to that other line that we drew right there, 336, right here. And then it came down and it moved. If you take the average of all the moves, above, below, above, it was right in this line that was the heavy support. We again came down to it right here, and then what happened, it rolled down and bounced. Now, I don't expect necessarily a bounce like that right now. We drew the same kind of lines on other areas too. 318.26, 318.28. Where was the low yesterday where it started bouncing? Let's see. Low. That's really ridiculous, actually. I didn't look at this previously. 318.26. Let me see what this one was. I want to see what this line was right here. 332 was the low. Interesting numbers. The bottom line was that when we look at this, it was a pretty good tag of that line. Was that the reason the markets reversed yesterday and then started screaming higher? Absolutely not. We finished at 340 yesterday. That was pretty unbelievable. After it dropped down, approximately 7.5% round trip. Why is that important? Because if we do the work and we start looking at where those numbers are, we can get more comfortable at saying, you know what, that's a level that I would be interested in setting up. It would be an area that I would be interested. The fact is that yes, there is there is a bounce point right there that really was very significant. So something to really consider. Let's go to the charts, the discussion, and see what we're going to talk about today, though. But I really want you to imprint that. If you can do a screenshot of that, I want you to look at that very carefully. That would have taken out some of the emotions out of this and said, you know what, at that level down there, I am not going to get crazy at this point and start just bailing out on everything. Maybe what I would do is start thinking about a reversal that could happen from a bounce point. Still in the short mode on a daily basis, clearly seeing that red autopilot number color of the bar right there clearly shows that you are in a short bias. But we've seen this kind of move before where we see this reversal. Look at right here, this reversal. And before we go any further, let's talk about the KRI. The KRI, and I'll share with you, it is a -2 right now. This sparked a -4 yesterday. It was -4 yesterday. And where we are is a situation where we saw that bounce off that low point, okay? Low yesterday was 410, right to this level right here. I think we marked in a 410. But it was a -4 with a green circle. That's an important level of oversold ratings. So what's happening? The theme, Putin rocks markets, clearly, and a very amazing timing. Looking at where we are all concerned about the fact that we're going to see the Fed raise rates, and everybody's really concerned about what's happening. And then what happens? Well, we get a situation where there is a pretty big reversal when we saw a little inkling of, well, maybe this isn't as bad as we think. And on the invasion, we saw commodities limit up, corn, wheat. We saw gold flying, 1930, down a bunch today, down 38 right now, down about 2%. Oil and energy complex was incredibly strong yesterday. Of course, China was a big focus too. Like, what if we see that China is going to invade all of a sudden Taiwan and take their lead from Putin? What's going to happen then? The bigger issue right now is this right here, as I see it, cybersecurity. Taking a look at that area, as that could be the next area that Russia and other, we'll say, not so friendly neighbors utilize in this entire process. One of the best areas in the market yesterday was, in fact, the cyber-related stocks. You can look at the ETF HACK, H-A-C-K, and that was an area that really did very well yesterday. It was very significant. And I think that what you want to do is you want to start literally looking at where that is in terms of the outlook for a different kind of quote-unquote war. Rather than a ground troops war, rather than a war where we're going to have a situation that Russia is marching in all over Europe, the possibility is that if we continue the sanctions, what if there is going to be a significant amount of alt war go on, like a cyber attack, and that's happening in Poland right now, in fact. So what we did see in the markets, and I think this was really very telling of where the markets and the immaturity of a lot of the traders, frankly. I'm not talking to this group. I'm talking to, you know who I'm talking about. I'm talking to the meme stop Reddit crowd. And if you fit that mold, well, then you'll have to take this title as well. But the fact is that they are selling, then asking questions. You know, yesterday I posted a tweet. I said, Russia said they're doing exercises in Ukraine. And what's going on? Peloton is moving up. That's kind of the research that's being going on with the crowd right now that doesn't really pay attention to what the facts are. They see a headline, they don't look any deeper, and they say, oh, well, and it was kind of a funny discussion I was having, of course. But in the end, the reality is the sell first, ask questions later probably was good a week ago, but when we started to see that the markets were tumbling down, yesterday in particular, you had to wonder, is this going to be something that we continue to see for a while? The obvious answer is that we may see this happening for a while, but when you see a move of 22% from top to bottom on a major index like we've seen here on the NASDAQ and the small caps and all the things that are going on right now, you have to take a moment and pause and say, where are we going from here and what are the reasons? Are we having just a simple reversion to the mean gone too far? Yes, you can see that. You could see that on the chart. And on the chart, which I've seen and said before, we have the same, it looks like a little ghost, right? Like a Casper the Ghost here. That disappeared quickly, but You see what I'm talking about? This ghostly phenomena right here. It's on chart after chart after chart. It is not a technical term by any measure, but it is something that is interesting where we saw that top blow off top. Maybe it's not done. Maybe we're going to go even higher. And then the reality check here. And then, oh, maybe it's just over here. And then, whoa, what's going on? And where are we going from here? Where's the next level? I would think that this 318.28 will be interesting to check. I don't think it's probably going to be something we're going to test right away unless things really heat up dramatically. That's on the Qs. That's on the NASDAQ 100. But we did see a valuation change recently and a reversion to the mean on that as well. When we look at whether it's PE or price to book, price to sales, those companies have gotten blown out when we just priced on price to sales. When we look at, well, it doesn't really matter if they're making money. Well, it does matter if they're making money, or at least they have a path to profitability. That's a big issue right now, where the companies are able to show that they have the opportunity to make money in the future. Big issue right now. The other thing that's going on is the Fed dot plot. And you have to admit that the probability is off the table somewhat of a 50 basis point move in March. Now, that came about when Bullard started talking about the opportunity of, hey, you know what? Listen, inflation is pretty hot. We saw the PCE numbers come out today. Pretty hot. We saw that the numbers that we saw on PPI, CPI here and abroad are out of control. Germany PPI is at 25%, which is ridiculous. Ours isn't approaching the 7% range. That's ridiculous. Fact of the matter is, some of this is based on commodity prices, food prices, all those things that we're seeing that are jumping also due to the fact that, well, Ukraine and Russia are major commodity providers. That being the case, you have to say to yourself, is this temporary or is this embedded in? Some of it may be concerning. OPEC's not playing along. It doesn't look like that our government's going to do much to really make this happen in a way that's very good for us here. The truth of the matter is that this is a very odd situation that's going on right now. The situation that we see that's happening with inflation, listen, there is inflation. End of sentence, period, exclamation point, put it in a ball, parentheses around it, end sentence, we have inflation. However, is this inflation that is something that is the quote-unquote normal inflation, or is it something much different? So that's something to consider, and whether or not the Fed is desirous of, in the middle of a financial market chaotic move where we see the Russian market down 50% due to sanctions and the ruble collapsing, and we see that European markets are in big trouble right now, and we see that our market is having a problem, financial conditions tighten, the psychology of investors starts to change dramatically. Well, are they going to be saying, you know what, we need to really ramp up this move? I don't think so. The 10-year has been holding right about 2%. We saw that last week. The VIX popped to about, I would say, if my memory serves me correctly, it was 38 yesterday at the top. And what happened from there was it came back. The KRI, as I mentioned, hit oversold on Thursday, and the Spearman and the McClellan. So we saw this yesterday. It wasn't down at the level. Spearman came down. The McClellan came down to about 180 or so yesterday. That's where it was. Then we saw this big reversal off. Still in negative territory. That should be a warning sign. Same thing here. This started to round a little bit. See the Spearman down to lows. Mark any time that has happened right about here. Let's see the next time. I'm just going to look at the bottom, then look at the top. Right about here. So that we're starting to see that potential for a little slight touch of, are we starting to see the possibility that we got to an oversold level that is very significant? McClellan's still not showing that. I wish it would have been also in tune and we would have seen something a little bit better. It does show me there is potential downside that is out there from the advanced decline scenario that is out there. The potential still remains that we may see the advanced decline come in a little bit if history is any guide. What else do we have here? Oh, I want you to ask yourself a question, some homework, some thought, something to write down, something to consider. In working in these kinds of markets where we've seen not only correction territory or quote bear market territory for certain indices, the question is, and you need to ask yourself, what's washed out? What has just gotten totally obliterated? where maybe, just possibly, the selling is getting towards an exhaustion point. Now, we saw some of that yesterday. The highest short interest stocks, the stocks that were rocked the most, really got a pickup very substantially in the move yesterday. As a matter of fact, they were the best overall performers. We saw some names up 10, 12, 15%. These are the names that were sold time after time. Peloton is one I mentioned. They were sold time after time after time, day after day after day, for a reason, without a reason. Just everybody was bailing out. The hell with this. I'm done. I'm not investing. This company must be going bankrupt, I guess. Well, that wasn't necessarily the case, was it? Yes, they're in bad shape. But what is washed out and what could be the next dynamic name to start making a very good move on a day trade opportunity? We saw the names like in Etsy. Let's see what they're doing today. We saw the names like Square, which is called Block now. Wow, nice earnings number. The sellers may have been exhausted. Short selling was really got hot. And where are we now? Big move to the upside today on their earnings move. So we'll look at that as well. Economics, employment, initial claims in line, GDP 7% annualized this week. Confidence was up last month. And PCE price we talked about, pretty hot. That is the Fed's preferred measure. So we are now battling. And by the way, just back up. Let me back up. This is important. This is a very important point I want to make right now. What happened yesterday? If we were looking for a reason of why the markets moved so substantially yesterday, what was it? Well, was it that the markets are getting more comfortable with the fact that Russia is rolling over Ukraine and could, in fact, advance into another area and possibly have a situation where we may have a major war break up, a ground war? Well, no, I don't think so. I don't think that's really the case. I think there's still a lot of concern. You can see what's happening with the NASDAQ, which is dropping down into just flat territory right now, and the markets are moving. I think stocks hit the buy zone. That is true also. However, I think one of the things that really was resonating in the markets yesterday, and a reality check on a lot of people, was, wait a second, the Fed has been talking a very aggressive game. How can they do so in the middle of this massive potential for a wartime environment? That is not what a Fed does. The Fed opens up liquidity during these kind of situations, backs banks, backs the financial system, and the opportunity, which was lost by them several months ago, to actually be aggressive in the rate hike has been lost once again. Once again, between the taper tantrum that we've been seeing, the higher rates, the financial conditions really get much tighter. All of this has been weighing on the fact that while we have inflation, and what is the inflation from? Listen, the Fed raises rates 200 basis points. Is that going to do anything to the price of oil if Russia is invading Ukraine, natural gas, corn, wheat? Is that going to change any of these prices that are part of the inflation picture? Absolutely not. So there's a reality check there that the inflation that can impact, or the rate increase that can impact inflation the most, is not going to be impacted by what the Fed does. And if they go more aggressive, it's going to really start throwing things into a tizzy and possibly throw us into a very quick recession if they get very aggressive. So why not just say, you know what, we're going to raise rates. We don't want to lose face. We don't want to have our credibility in question after what we've been talking about. We'll raise rates. We'll back off on the bond buying right now. We could always restart that because we did bring that down to pretty much no buying going on. And that is what happened with what someone said, Lisa, stocks hit the buy zone. Economics next week, ISM manufacturing, ADP employment. We are having our employment numbers once again next week, which will be interesting to see. And I mentioned the 4-hour coaching course. I will put that into the chat right now, where you can get that if you're a new subscriber. Just send us a note at support@TriggerCharts.com, and we will go from there. Some stocks to watch. Let's take a look at these, where we are right now with these. Just looking at down my list here, what's happening. All right. Palantir. So Palantir, look at this. I mean, you could have picked this up sub 10 yesterday, and it finished the day at 11 and change. It was up 13% for the day, but look at these numbers. These are, this is a government, this is a company that works with a lot of governments around the world. And what they do is, a lot of governments, I should say. And basically what they do is they do a lot of not only cybersecurity, but they have a good degree of watching that goes on for any kind of espionage and computer related. And this could be something interesting. Now, the stock is down from 28. Now, maybe it was done a little bit too hot. This is a Peter Thiel stock. It was down to the level where it was on its IPO, really, or its opening into the market theme. Went up to a total of 45 recently, but let's not even talk about that. Let's cut that in half. 23. Does this stock have an opportunity to move back? Well, we're below the line here. We did get some kind of a relief, and we are seeing still a negative sentiment on the aileron here. Nothing that is like, wow, but I thought it was totally irresistible not to grab in the $10 range yesterday and ride that out, and it turned out to be an excellent investment on the turnaround yesterday. Not really from a charting standpoint, no matter what time frame we look at, does it look good? It looks just terrible. I mean, you want to start looking at anything less. We also talk about daily, by the way, because daily is just an interesting chart to look at, gives a bit more perspective. I always say start with that and let's go to see where things are. On the 30-minute, it is spiking up. You have a little bit of resistance right here. You need to get above, let's see where we are. Right about 1269, a little bit of a room from here, and then you got a nice jaunt up to 1360. I do think that crowd strike as well, another stock you could have gotten the 155 range. Let's even call it 160, and it went up to 182 yesterday. It has a similar look to where it was on Palantir, that same move yesterday. A lot of stocks did, but we are seeing a little slight better move here. On a daily basis, you got a lot of headroom to get through at 189. Hack, if you don't want to pick, although I'm not as big of a fan of this over some of the individual names, but Hack is supposed to be the cybersecurity ETF. And if you look at some of the names, though, its top holding is, I believe, Cisco with a 4%, 3.5%, 4% position. I'm not sure what they really have as a pure play. So you're going to get a lot of junk in here to fill up the portfolio rather than some of the pure plays. I don't know why they don't have some of the more pure plays on the top levels. But RSX, we saw this is the Russian, Van Eck Russian. Now what you combine here is not only the Russian stock market, but also the ruble, because you're going to get the currency issue here. This thing is down dramatically. Obviously dropped from 23 down to about, where was it, low yesterday? 13. That's a pretty big move in a few days. Now it's up 11% and moving. There's some intervention that went on in Russia. If this is something that you're interested in, it's a hold your breath type of situation. We don't know where this is going. As the sanctions kick in, who knows if we're going to take them off anytime soon, especially if Russia continues to occupy, whether it's a peaceful occupation or whether it is a military conquest, depending on how it all plays out with any kind of surrender, etc. I don't know. Nobody knows. I don't know how that's going to play. Yandex, which is the Russian equivalent to, I'll call it Google maybe, technology that has a lot of hands in a lot of areas. Maybe a SoftBank, maybe a Tencent. But this dropped dramatically, 44 down to, where was it yesterday? 14 in a few days, up 20% today or 17% today. Again, once again, this is all about the talks that are going on that Russia says they are ready to talk and negotiate. I don't know. You can't believe them because they've been lying the whole time. But we feel like we need to believe them for some reason. I don't know why. Apple's in 163. It's been here before. It's got good support at this level right here. Dropped down to the level where, again, yesterday, look at this, down on 152 and then up to 162. Same stock chart that we're looking across the board. You can name any stock out there. I don't just pick anything. Look at these crazy moves yesterday. So when we look at some of this, but we look at Apple in particular, Apple has some problems. Of course, you have a war, you have a global situation or a slowdown. It's going to cause problems. You possibly have China speaking out and being on the side of Russia, or at least being cozy with Russia. And a lot of the manufacturing on Apple products comes from that region. You have a conflict in Taiwan. Oh no. You have a chip shortage and a shutdown there. Problems. Apple I like as a company, there's no question about that. Obviously reacting to geopolitical issues right now. Where do we go from here? I want to back this off a little bit. Let's look at weekly. Apple, look at that. Perfect. came right down into the buy zone, into the inside, if you want to play those insides or support. Came right there and bounced right off it. So very interesting when we look at that and we look at, let's look at Qs on a weekly. I wouldn't say that had any kind of discussion there. This one does. Right there, came into its weekly support. You get through here and you got a big hole down to 384 on the SPY. So that was something that I think was important. And then IWM cut through support yesterday on the weekly and is holding pretty nicely. IWM has a horrible looking chart. This rollover right here. And if you do get through this 191, you're definitely down to 160. Well, in that range of 165 after that big move from October. This is a long consolidation that did not resolve in a breakout, and the breakdown now looks much more possible right here from every standpoint across the board. Change this back to daily. Facebook, ew. Did see a nice move, maybe irresistible by some under the $200 level there. Gold, did see that pop, that move higher to 182. A blow off top by any measure. Same thing with oil. Let's bring up the commodity. Bit of a blow off top yesterday. Interesting to look at the XLE when that's in there. Down about 25 cents yesterday. Held its support. I do think this is vulnerable. The XLE right now and the OIH also did get cut yesterday. That's an interesting sign as oil is moving up. Foot Locker getting absolutely obliterated. Everybody's just walking away from this one. Hint, hint, wink, wink. It's down 26%. There's obviously supply chain issues, higher cost for their products that are causing big problems, and they see a slowdown happening. On the other hand, we see Square, formerly known as Square, now called Block. Okay. It's up. Where is it now? At 114. Not even up to its resistance level. It's up a lot after this big drawdown. I mean, this is 260. This thing dropped to 82. That's just horrible. Etsy saw some better numbers. They're increasing their pricing for sellers from I believe 5% to 6.5, I believe. So that's going to be interesting. Unity did a big move yesterday again. You look at this at 90 to 103, a 10% move. Overstock, somebody wants me to look at. Not a big fan of this. Too much Bitcoin involved in this one, like MicroStrategy. This is something they've been working on. Overstock, you look at the same with Wayfair, similar looking, dropped down, came up yesterday. VIX, where's the? Let's look at this. 1.97 is the current yield on the 10-year after the numbers came out this morning. So I think there's a lot of concern in the markets continuing right now with regard to what's happening in Russia. I would not be surprised if we take back some of those incredible gains from yesterday. Some stocks may do well. You may see some movement to the upside on some of these names. I would really continue looking at some of the names that you see right here. But the oversold levels, those that have washed out, something to be looking at. So, the metal, I mean, you can look at like a deep, there's a couple different ways to look at this. So you want to look at silver, for example. Again, blow off top. A lot of blow off top. Let's see if this one has the same look. I was kind of curious. Yeah. DBC, the Commodity Index Tracking Fund, it went up as high as 24 and change. That's a blow off top if I've ever seen one in my life. Down to 23.40, right down back to here where we are. This is the commodity basket. There's also a DBA, which is the agriculture basket. Same look. We saw that yesterday as corn and wheat limited out. All right, we're going to end it there. Next week, Kevin Hoffman is going to be running the show, so make sure to stick and check out that. Hopefully, all of you are checking out everything on TriggerCharts.com as well as the TradeStation Trading app platform. Thanks so much for joining me today and each and every week. I'll see you again next week.